Hey everyone, welcome back to my channel. If you are new here, my name is Carla, and in today's video, we are diving into a very crucial topic for entrepreneurs, which is why it is vital to separate your personal and business credit. Understanding this could save you not just money, but safeguard your financial future. Make sure to subscribe if you haven't yet, and let's get straight into it. Why separate personal and business credit? Simply put, it's about protecting yourself and maximizing your financial opportunities. Separating these can affect everything from tax filings to personal liabilities and from loan condition to build your business's creditworthiness. So, first off, let's talk about benefits. One of the first benefit I will say is liability protection, which basically keeping these credits separate helps protect your personal assets um, if your business is sued or face bankruptcy. Another benefit is credit opportunities. Basically, business often have access to higher limits and also higher lines of credit than individuals. Separate credit ensures you can tap into those without impacting your personal credit score. Another benefit is clearer financial picture. This basically what it means is it simplifies bookkeeping and taxes for you, making it easier to monitor business growth and plan for future expenses. Finding this video helpful so far? Please hit that like button and consider joining my free VIP group. I will leave the link in the description box below. In this group, we dive deeper into personal finance strategy and business, so I hope to see you in there. To effectively separate your credit, start by establishing a business entity like an LLC or corporation. This is crucial as it legally distinguishes the business from your personal finances. If you are a beginner on this area or this is going to be your first route or your first business, I will say to start with an LLC. That's what I have, and actually, I think that might be the best choice. So don't do the sole proprietor things because sole proprietor basically is tied up to your personal credit and your personal finance. So just build your business and establish your business entity like an LLC. The second thing that you're going to do is obtaining an EIN number. Basically, this is the employer identification number from the IRS. It's essentially like a social security number for your business. That way you can separate the two things, the two entities like personal and business, and go from there. The next thing that you're going to do is open a business bank account. Use this strictly for business transaction. Do not get involved into combining personal and business on each category. Keep it separate. Everything that you do on the business account, please focus on just everything that is related to the business. Don't mix up the personal stuff on the business side or business side on the personal stuff, because then it's going to be a mess in at the end of the year. For tax purpose, it's going to be also a mess. So keep it separate since the beginning. The next step basically is applying for business credit card. I will suggest you that choose credit cards that reports to business credit bureaus only. Do not choose. Try to do your homework, do your research, and pick credit cards that actually report to the business credit, because you will need that in order to grow your business credit and your score and all of those things. That way, you can get more credit, line of credit, and all of that in the near future. Um, Try not to focus on credit card that report in both personal and business. No, that's a no. Try to keep everything separate. When applying for business credit cards or loans, you will generally need a few things. First is going to be a good business credit score from agencies like Equifax, Experian, or Dun and Bradstreet. So you have to focus that you need to build your business credit in order to get a good line of credit or a good credit card with a lot of funds. Another thing that you will need is basically proof of business income. So depend on what you're applying for. Maybe let's say that is a loan. So every institution has a requirement and also is based on the amount that you wanna or the amount of the loan. So if it's a high funding that you are requesting, they might ask you for some documentation like business income, like tax, the last 2 years of the tax. So this information of the documentation that they might require is vary depend of the products that you are requesting or trying to get applied for. The other thing that you need is basically your EIN business cards often have higher credit limits and different interest rate compared to personal cards. And they can offer rewards that align more closely with businesses' expenses like travel, office supplies, or telecommunications, or anything that might be what you need. I don't know if that's going to depend of your business line or your business niche or something like that. So just be aware to do your research and your homework before you choose to apply for a specific product or credit card or a loan or something like that. The next thing is basically to build and maintain a strong business credit. You need to pay invoices on time. Don't fall for these, because this can definitely mess up your business credit, because it might incur in late payments, and we don't want that. We don't want to deal with those situations. So always pay your invoices on time. Keep your credit utilization low. So basically, just try to get your I mean, you know what I always say, this is a game. So when you are trying to spend money, try to pay as much as possible before the statement close. That way, you when the statement close, the amount that you owe at the time is really low, and you can go from there. So that's how you play that. The other thing is regularly monitor your business credit report for inaccuracies. So you always have to do this often, because as at the personal side, you always need to be checking your credit reports to see if there is something pop up or something that you can um, clean up or clear up or maybe dispute or whatever is going to be the case. But that way you always keep eye on it to see if they are like they are supposed to be. And one last thing is basically engage with lender that reports to the major business credit bureaus to ensure your credit activities are properly recorded, because that's going to benefit you. So keep eye on this. Let's take a look at real life scenario. So imagine your own small design firm. By separating your business credit, you ensure a significant loan to upgrade your equipment, which is pivotal during a major contract. This loan, thanks to being in the business name, doesn't jeopardize your personal credit score, allowing you to finance a new home to a great rate simultaneously. So you can have these working at the same time. On the personal side, you can be working on something. On the business side, you can be working on something and go from there. To sum it up, basically separating your personal and business credit isn't just a best practice. It's essential for protecting your assets, clarifying your financial analysis, and expanding your business effectively. Don't forget to subscribe for more insights and check out my free VIP group that I will leave the link in the description box below for more exclusive content and support. Drop your question or experience below. We love to hear from you. Thank you for watching, and I will see you in the next one. Bye.